haven't failed a single challenge for the last 3 months, and all of this whilst working 16 hours every single day as a grocery delivery driver. And in this video I'm gonna show you the proof, the certificates, the payouts, and my strategy what I actually use to be able to do it. But guys, before I show you how I did it, quick story about me. My name is Thomas, I'm 25, and around 2 months ago I was living in Bali, but I was forced to come back to Czech Republic. And thanks to all the lessons what I have learned, since I'm in Czech Republic, I haven't failed a single challenge. I was able to gain around $5,000 of prop firm payouts, and I've completely changed my mindset about prop firm trading. So in this video, I'm gonna show you how I did all of it. Let's go into it. So boys, let's start out with the proof and with results. As you can see, this is the Funding Pips website. With Funding Pips, I'm currently funded $50,000. And as you can see, today is 2nd of December, and I have multiple certificates, but let's only talk about last 2 months. I passed the phase 1 around 2.5 months ago. I passed the phase 2 around 2 months ago. And since then I was able to gain $1,500 payout. I was able to get for $27 payout, $400 payout. And right now, currently, I'm waiting with my Funder account, as you can see right here. It's gonna be around $1,200 payout, which in total it's around $4,000 in payouts, and the payout is gonna be tomorrow, because as you can see, 2nd of December, and the payout is gonna be tomorrow, which I'm expecting $1,200 from this Funding Pips account. So that is challenge, verification, and 4 payouts in a span of 2 months. Now with FTMO, I'm funded $100,000. So my total allocation currently is $150,000. And as you can see, I passed the FTMO challenge around 1 month ago. I passed the verification around 2-3 weeks ago. And I was able to get, these are all payouts, I was able to get at $880 worth of payouts worth of money from FTMO, which I received around 5 days ago or something like that. And if I go on my dashboard, as you can see, I have the FTMO challenge, which is currently 2% in drawdown, which I bought yesterday. I took 1 loss on that account, and I have that FTMO account, which is Funder account, which I'm currently floating around $150 in profit. Not a big of a deal, but yeah, those are my current results, current accounts. As I said, I'm funded 150K, and tomorrow I'm going to be expecting Funding Pips payout, and this is that FTMO which I'm currently trading. So right now let's talk about strategy and how I did it. So boys, my strategy is pretty simple, I would say. For me to be able to take a trade, I need to see 3 things to happen in the markets, okay? So the first thing, when I'm actively analyzing a chart, what I'm looking for is a direction. Is a trend, is the same thing. And I'm looking on direction based on H4 and based on daily time frame, right? So, for example, you got this market, you got this market, and you also got this market. This market is called a bullish market. Why? Because we are creating series of higher lows and higher highs, higher lows and higher highs. In this market, this is called a range market. I'm not trading a range market, okay? In range market, there is no high probability setup for me. So when the market is not in a clear either uptrend or downtrend, I'm not trading it. And this is a downtrend. Why? Because we are creating lower highs and lower lows. Lower highs. How can I identify this is lower high? Because it's lower than this high. So right now, if I go on chart and I see, let's say I'm in a gold chart right now, and what I can tell immediately right now, we are in a bullish trend, right? Why we are in a bullish trend? So let's just analyze it on H4. On H4, we broke market structure right here to the downside. So we are creating lower highs and lower lows. Lower highs and lower lows, but then market broke structure to the upside when market broke this structure point right here. So at that point, market was clearly bullish for me. And when the market is clearly bullish for me, I'm not looking to take any sells, I'm only looking to take a buys, okay? So what I also like to do is I like to mark out my swing highs and swing low, okay? And swing high and swing low, how can I identify it? In this case, this is the swing high, swing low, this is the swing high. Let's just say this doesn't happen yet, okay? Because this is new swing high, and this is new swing low. So when the market is gonna break market structure, when it happened right here, when price broke this right here, that means this is gonna become our new swing low because we broke market structure, right? And when the market is gonna pull back and form some type of a higher low point, this is gonna become our new swing high. And you can also think about it as a push and a pullback phase, okay? Market got two phases. We got push, we got pullback. We got push, we got pullback. I don't want to buy in a push phase. I want to always wait for a pullback, right? I want to always wait for a pullback because let's say the bigger the pullback, the better the risk reward, okay? Because as you know, market is only trending up, sideways or down. So when the market is trending up and let's say market pulls back here, there's a really high chance that market is gonna either tap this low or break this high. Either tap this high, or break this high. So that's when it comes to direction. H4, daily time frame, swing high and swing low, push and pullback phase. Don't buy in a push phase, wait for a pullback. All right, now the second thing. Second thing for me is gonna be key levels or support resistance levels. Now, how can I know some level is a key level? Okay, so the first thing for me is gonna be previous structure points. Previous structure points. And the second thing for me is gonna be daily H4 levels. Now, let's talk about previous structure points. So let's just say market is trending up in this case, right? So we know this was the low, this was the high, this was the higher low, then market broke structure when we broke this high. So this point right here becomes a previous structure point for me. And that is a key level for me because market tends to retest previous structure points. So I'm going to mark it out. And in this case, market did exactly that and push higher. So when market broke this high, this point becomes a previous structure point. So what I'm going to be looking for, market to test it and go higher. That's when it comes to previous structure point. So if I go look at the chart, let me remove all the drawings. Let's just say market was trending down, the market broke structure. This was the structure break, this was the structure break. So I'm gonna mark out this as a previous structure point, right? When market broke this structure point, so I can mark out both. But in this case, market broke it, market went and retested it, and then market broke structure again right here. Right here, this is the previous structure point, which is right now broken, but it's broken only slightly. So I'm gonna be using the second key level, which is gonna be H4 and daily level, because at this point in time, price is currently under the structure point. So this structure point level is not valid for me, but it's broken. It's broken, so I know. Let's just mark it out. This is my swing low, and this is my swing high, right? Let's mark it out with white. I'm gonna delete this. This yellow line is previous structure point. But how am I drawing the second key levels is based on reaction what price gave me in the past. So if I look at the past, price is trending at all-time highs right now on gold, so there is nothing in the left, but I would, if there is something, I would use it. But I'm drawing it based on reaction what price gave me, right? So as you can see, price respecting this level in the past, price respected this level here, respected this level here, here and here. So in this case, this point became a key level for me. All right, why? Look at the reaction. When price tapped it, went down. When price broke it, rejected, went up. Same in the past. So what I will be waiting for is either break above this previous structure point, retest and go higher, or wait for price to retest this key level right here and then go higher. All right, so key levels are previous structure point levels, and key levels are as well levels which price reacted from heavily from the past. So as you can see, this is the key level, and let's say this is some type of a key level as well. Look at the reaction, right? This is one reaction, second reaction, price flew down. So I'm gonna be looking to target this key level in the past. Let's say price is gonna break it. So what is the key level for me? Is this, because directions from the past, right? If I go and zoom out on a daily time frame and I'm gonna check the past, let's say. So in this case, like, this is the obvious key level, right? Because as you can see, these reactions, whenever price tapped this key level, we got huge reaction to the outside. On the other side, we got this key level. Whenever price tapped this key level, it was the huge rejection to the upside. The bigger the rejection, the stronger the level. And now, boys, the last thing. The last thing is the most important thing. I mean, you need to have all these things in sync for us to be able to take a trade. But first, direction, second, key level, and the third, lower time frame structure shift. Okay, so what I mean by lower time frame structure shift. So let's just say this is an H4 time frame. Okay, this is going to be H4 time frame, and let's say this is going to be 30-minute time frame. Right? This is H4, this is M30. So the lower time frame structure means is that whenever price is pulling back, right, we got our push phase right here and we got our pullback phase right here. So whenever price is pulling back, that means on the lower time frames such as H1, M30 and 15, price is creating a downtrend in a pullback. It is a counter trend of that main trend, because I know the main trend is still bullish, right? And on H4, it's gonna be only few candles to the downside. But on M30, it's gonna be whole downtrend, because as you can see on M30, price broke market structure when price broke under this low, which means on M30 and 15 and probably on H1 as well, we are right now trending bearish, not bullish, but we want to buy. We don't want to take a sell, all right? So this lower time frame structure means is that for me to be able to buy this market and to be able to spot this higher low point on H4, perhaps daily time frame, I need to see M30 and H1 flip to the same direction as a main trend, because we can pull back, even let's say 100% and then go higher. So that's why I and you guys need to wait for the lower time frame structure shift to happen. So let's just say we got some type of a structure right here. So I would mark it out. Excuse me. Let's say here is some type of a key level, and I see price on M30 and H1 trending down. I see right now price tapping the key level, still trending down, tapping the key level again, and then break structure to the upside. At that point, I got all the confluences what I was waiting for. I know the major direction is up. I know we are trading on a key level. And I know the M30 and H1 time frame just flip structure to the upside, because whenever this level right here was broken to the upside with this push, that means right now daily H4, M30, H1, M15, every time frame is bullish. And whenever every time frame is bullish, there is a really high probability price is gonna continue to be bullish. There is a really low probability that price is gonna flip bearish on us. So that is what lower time frame structure means. Whenever price is pulling back, we are creating a counter trend, and we need to wait for that counter trend to flip again to the main trend, right? So if I go on the chart, let me remove everything. So let's just say in this past example, this is, by the way, the trade I took, and I made $2,000 on that trade. So let's just say this was our swing low, this was our swing high, right? So this was our push, and this was our pullback, right? Right now, let's mark out the key levels. So this was the previous structure level, we can mark it out. And this was the key level as well, based on reactions for us. Boom. We are not going to be using it. So now, I know direction is what? Direction, bullish. I have it in check. Cool. That's the first thing checked. Are we trading on key level? Yes, we are trading on key level. That's the second thing checked. Now, zoom out on H1. Zoom out on H1, and as you can see, guys, price was trending up all this time. And then what happened? Price broke structure to the downside when market broke this low. Okay? So that's the waiting game right now. I need to wait for structure to shift again to be bullish, because right now, as you can see, this is not a bullish market on H1. This is a bearish market, right? So for me to be able to take a trade with this major H4 direction, I need to see price to break above this last structure point, which is right here. And as you can see, price did exactly that. So if I zoom in right now a little bit, we got our swing lows and swing highs. So at this point, whenever price broke above this structure point right here, this becomes my internal low. Let's mark it out as, I don't know, as blue. And this becomes my internal high. We got our swing high and swing low, and on a lower time frames, it's internal low and internal high. Whenever price broke again this structure point right here with this candle, this becomes broken structure on the lower time frames, which means right now H4, daily, H1 and 30 is bullish. And we got completely the same thing. We got push, we got pullback, and that's exactly it. Okay, we got push, we got pullback, and right now, how would I enter this trade is exactly the same. I would wait for the lower time frame structure shift, either on M5, M15, M30, depends. This is the H1, but how I took this trade was exactly when price tapped this level again, went up, broke this structure point. I was like, cool, everything is right now bullish. I waited for price to tap this small level, which was the previous structure point on M15. If I zoom on M15, this was the structure point on M15, and as you can see, price was again with this internal low and internal high. Price was trending down, trending down, trending down, and then price broke structure right here. So what I did, I set my buy limit on this structure point. I set my stop loss under, and what was my target? My original target was swing high, right? Which we got there, and the risk reward on this trade was amazing. It was 4.6. But since I was already up $2,000, I'm gonna show you guys the screens from the trade. I closed the trade, I believe. Where did I close the trade? I believe I closed the trade here on this week. Yeah, I'm gonna show you guys the string, but the trade, yeah, it was around 2.5 R, and that's basically it. That's basically how the strategy works. Direction, okay, cool. I know we are bullish. That's the one thing check. Key level, second thing. Whenever I'm trading on a key level, I need to be patient and I need to wait if there is gonna be that lower time frame structure shift, which happened. And only me understanding structure, only me understanding the bigger picture, only me understanding whenever the lower time frame structure shift is happening and is gonna happen, I can position myself and I can literally target all the time swing high and swing low, and I can make these crazy risk rewards. Because if I measure this pullback, let's say fips from swing low to swing high, we pull back around 61.8%, which is a great level to pull back. We pull back at this key level, and at this key level we flipped market structure first on H1, and then this H1 pullback flipped its market structure again on M15 and M5. I'm gonna position myself, I'm gonna target the bigger picture, the swing high, because all this is noise, right? All this is noise. But what this point is a higher low point on H4 time frame. Because on H4 time frame, as you can see, it's push, it's pullback, this is a higher low point, and whenever I'm expecting a higher low point to be formed, I'm also expecting a higher high, which is this. That's why I'm always targeting the swing high. And that is it, guys. That is literally it. That is literally all you need to know to be able to make money trading. All you need to understand is market structure. All you need to understand where you are at the bigger picture, and you'll be good. You'll be good. As I said, in the past 2 months, past 3 months, I haven't failed a single challenge. I withdrew over $5,000 in payouts, and this is how I did it. This is how I did it. So guys, if you like this video, leave a like, leave a comment. Let me know what you want to see in the next video, and I'm gonna see you guys in the next time.